All right. Hello, everyone. Welcome to the Tuesday, January 30th edition of our live show here with me, your host, Greta Wall, and David Prince, the leader of T3 Live's Inner Circle. David, thanks for joining us for today. Let's just get right into what we're talking about today. So I'm going to go ahead and share my screen so we can get on topic here really quickly. For everyone who's joining us on YouTube or Twitter or LinkedIn or Facebook, make sure to leave comments, ask questions if they come up so that David can be sure to answer those for you guys. But all right, so this is a huge week. Within T3, we've kind of referred to this as like the Super Bowl week for the stock market because there's so much happening. So today we're going to talk about how David is navigating these huge earnings that are coming up, the Fed meeting, the first one of the year, the jobs report coming up, and everything else that's happening in the market around all of these things. So first, David, let's talk about SMCI.
Sure.
This was obviously a huge winner for you over the past 2 weeks. We talked about it last week. They reported earnings last night. So a quick overview of those results: earnings beating, revenue beating, coming in even better than those pre-release numbers that SMCI had, released that drove that huge win for you over the past 2 weeks. Huge guidance for the third quarter, their fiscal third quarter, on both earnings and revenue, and a huge outlook for the full year. So give me your reaction to SMCI's report last night.
Sure, not to be cute, but thus far it's done exactly what I told Inner Circle and what I mentioned on Twitter yesterday. I think it's a little extended, sell the news reaction. Everything looked great, but more downside than upside when it was 550 pre-market. So I actually told people I had to jump on a Benzinga call, but that I thought it was a solid short at 550 pre-market. And I also mentioned I wouldn't be shocked if it went red today. Not because anything was wrong, but just because gravity does sometimes exist. And we've at one point up 75% on what is a small cap, technically, but not a $2 billion company. So just a little rest, needs to build a new base, maybe shake out some sellers, some fast money. Thus far, it's done exactly what I thought.
All right. Just a reminder for everyone, David was early on this stock. He noticed, I think it was 2 Thursdays ago, so heading into last Tuesday, that it was trading, at a really cheap, it was trading really cheap on the PE ratio. And so he went long on it January 19th for the first time. And, we had that huge run up to the $400 mark. You weren't holding any stock heading into this print, correct?
No, I got flat a few days ago, 470, 475 level. I just thought I didn't have a lot of edge going into the report, and I would play it thereafter and just kind of absorb numbers.
A lot of comparisons between SMCI this week and NVIDIA, the type of guidance that we saw from NVIDIA throughout the year in 2023, quarter after quarter, kind of those huge guides upward. Do you see similarities between the two stocks?
Yeah. Well, first off, SMCI is probably 25, 30% connected. They literally derive maybe 25, 30% of their business via NVIDIA. So by simple fact, yes, it is. It's not yet proven that way, right? NVIDIA has built something that they were out and front center speaking about and building towards for several years, right? Real technologists, we're talking about this eventually happening. I'm not one of them, and it being the AI leader. I would say that they're in a great position, right? Supermicro is right where they want to be because the leader needs them to some degree because they constantly need servers and the back end that Supermicro provides. But they don't have the trust of the street to say this is going to continue for the next 2-3 years. So a little bit of a shady history versus, I don't mean bad, but just shady history versus NVIDIA. So it's similar, but it's not the same, right? Jensen can get in front of people and sound like a maestro. He's a Thomas Edison, whatever you want to describe him as. I watched the CEO of Supermicro yesterday on Kramer. Let's just say I'm sure he's a bright gentleman. Look at all he's created, but he is not Jensen. So there are similarities, but they are not the same.
All right. Yeah, that makes sense. Okay. AMD is the next big company in this space, the chip related space. They're obviously a chip maker. SMCI is not, but has the exposure. But next to report is AMD. You've been sounding the alarm that AMD has been totally overhyped heading into this report. That there hasn't really been that much of a catalyst for these huge moves we've been seeing in the stock, but it's been happening. You shorted AMD last week around lunchtime on Thursday. The quote that we put out on T3 Live's Twitter was that David was screaming at lunchtime to short AMD, and it was right after Josh Brown. I think he
basically said
sell, right?
Money, he had gone flat, that it was enough. You can't predict whether it's going higher, but it was a bit much.
So this is a screenshot from the Inner Circle chat, just thanking you for your guidance on the stock. If people followed you short on that, talk about your rationale for that short.
Sure. I haven't been fighting AMD on the way up. In fact, last I was long, I think was around 140. So I've been long at times, and I understand why it's going up. It's riding one of the most powerful waves we've seen in the market in years, being AI and NVIDIA. But what I've been saying is we don't have factual data yet. We know their AI chips are moving. We don't know to what degree and how much revenue it produces this year, 24. So I said, this is not a small cap stock. To double its market cap, I mean, it was $95 after earnings last quarter and then ramped. So my thought was it's more of a cute short into these outsized moves, and that's how I played it. Played it 2 different times in the past 2 different weeks. I think one time we caught 10 points. Maybe last Friday we caught about 6 to 8 points. And that's playtime, fun, cash flow. That, by the way, you make 8, 10 points in a couple of days, I'm more than happy. Where we are into the print is pretty basic. I don't discount that Lisa doesn't raise guidance, but if she does not, Lisa Su, who's one of the most influential CEOs we've seen in the last few years, after all, AMD was a $2 stock once upon a time. I don't discount that she doesn't raise guidance huge, but without it, there is more risk to me in AMD than there is several semiconductor names. One, Lisa is notoriously conservative, which has benefited her, right? Under promise, over deliver. 2, it doesn't trade at 20, 25 times earnings like NVIDIA once did, maybe 27. Now it's trading 47, 50 times. So unless they really up the guidance, there's some downside risk. Is it going down 30? It's probably not very likely. But if it's just a beat and guidance is within range or a slight raise, this could be down 10, 15 points like that. I think they're pricing in 16 last I heard. So I think it's a difficult print to be long. Now, if you're long term and you don't care about where the stock trades in the next 4 weeks, then what I'm saying really means nothing. But they really have to show huge inroads to their NVIDIA competing chip. That's the bottom line. If not, there could be some downside. And then some people like to read into things. Intel soft, they're involved with PCs like Intel, and maybe you have some hints of softness, but I'm not reading into that part.
Okay. Yeah. All right. So I pulled up the chart while you were talking, but just to look, obviously the stock is up huge into the print. David's saying that we need a huge guidance to really keep this momentum going, at least over the next, couple sessions. Might need some consolidation to happen here in this.
But if she guides up 40, 50%, we already have seen proven factual evidence from SMCI and some companies that even higher can continue to go higher with the right guidance. Yeah. But I just don't know if she's going to do that. Kramer said something very smart yesterday. I can't believe I'm saying that, but it was really logical information. What he said is, I've been involved with banking, so I know a decent amount of CEOs for years. They don't have a lot of upside to this early in the year raise guidance too much, because you give up everything up front, like you have nowhere to go but down. Again, it's that under promise, over deliver. So it's a tough print. All right, I'll shut up on AMD.
All right. One of the biggest names to report earnings so far this earnings season was Tesla, and the stock was really beat up after those earnings last week. You on Friday took out some puts on Tesla. These are known as lottos because they're 0 DTE puts. Here's the chart. You went long around 9:38 a.m. Eastern and got out just about 5 minutes later. There was some trimming and trailing, of course, on the way up there, but this is just a simplified chart to show your, first entry, your last exit. Talk about Lotto Fridays in the inner circle, why Tesla was a choice for you. And I know you were shorting Tesla again this morning. So talk about how you're feeling about the stock.
Okay, so first, I think of Lotto as exactly what it is. A fun way to have an outsized gain without risking too much money, because you should assume these can be zero. So it is not our focus, but it's a great way to make cash flow, and we're pretty good at it. Fridays are special because you're not paying that extra time. You're paying time that expires for that one day, right? It's Friday, versus you're buying a weekly option. So I do it a little different, though. I'm sure some people do. My thought was pretty basic. It was, okay, if Tesla is to bounce, which it did after hitting lows of 180 that showed some support, there are so many people stuck in this stock long. The stock is up 7 or 8 off recent lows. There are so many institutions that do not get out. Everyone who's been around knows institutions don't sell it all in one day. They don't like to crush a stock. They like to sell it, volume weighted moving averages and things like that. That day two, there'd probably be more selling, especially into a bounce of 7 or 8. And then the earnings report was, abysmal. So I said, okay, if we get a bounce into 187, 188, and I'm never exact. So once I saw 186.80, I said, okay, I got to go in and not be exact. I said, I don't have to pay time. And if I'm right and this reverses course and it's down 3 or 4 from where I do it, these options can be up 50, 100% quickly. Again, this is not something where I go out and buy $100,000 worth of Lotto puts. Maybe once or twice if I had some great theory, but not this. This is fun way. It's also a fun way for people with smaller accounts that can't go out and short a couple thousand Tesla. They can be a part of shorting it on a very short-term time frame and know exactly what their risk is, right? Because you can't risk more than you pay for the option. So we bought these puts. I forget. I can't even remember my kids' birthdays. So wherever I bought them, they quickly, the stock reversed. It went down 3 or 4. The options went up. At one point, 100%. I think I sold, honestly, when I made like 50, 60%. I was out. And that was a lot of Friday on Tesla. This morning, after closing close to the earnings gap, which was about 193, we got above it. Some people think it was GM had good numbers. Some people would say it's just follow through from yesterday. Some people would say there's nothing left to buy, so they're buying the one thing that's down. I said, okay, it's into the earnings gap, but these earnings sucked. Options could be difficult because it might be choppy and you'll get hit with time. I think a nice simple trade here is to short the pop on the open. So 195 through 195.70. Yeah, 195 through 195.70. I was getting short pre-market. Didn't want to be a hero, have a lot going on. It's earnings season. And as it came in, when it got to 193, I got flat and made my couple dollars. And it was a cute cash flow trade. I think the stock goes lower. I have some puts for next week that I'm down on a little bit. But like that's, again, because of short-term puts, that's cute. I can really know my risk when I'm doing stock, not worry about erosion. Nice trade, cash flow. And I could focus on really bigger and more important things like Microsoft, AMD, and the Fed on Wednesday. And that's Tesla.
Yeah. All right, great. David, I do want to talk about Immunome, which has been a stock that you have been, of course, heavily involved in. If anyone follows you on Twitter, they see you tweet about this, but you are also personally involved in this company. So you tweeted out back on December 31st, this tweet about the founder, the co-founder CEO of Seagen, which of course, if everyone remembers, Pfizer did agree to purchase. He's now the chairman CEO of Immunome. You said, I helped finance it pre-IPO. It trades less than 1 million shares a day. So I speak of it infrequently, but with one of the most important men in biotech running it, it seems insane not to put it on your radar. You have been heavily involved in this stock throughout this year. Yesterday, Leerink initiated coverage with an outperform rating. So talk about the stock, what you've been doing with it in 2024, where you see this going in the future.
Sure. It's a long-term holding as in like years, not days. But I have trimmed some recently because the stock's up nearly 200% in short order. So to just kind of like be upfront. My partner is probably the largest shareholder. We own a lot of stock. He was chairman of the board at one point. We financed the company years ago. Clay is really what you'd call a wild scientist slash businessman. His claim to fame is CGen, but what he did with CGen is take assets out there that were not being recognized, buy them for pennies on the dollar, and turn them into billion-dollar producing drugs, right? That's what CGen became, and that's what Pfizer needed. Well, for a couple personal reasons, it's well known because it's in the press, he had to step down from CGen because he had a fight with his wife. There was threats of battery. Anyway, those charges were dropped, but he was forced to step down. So here's a man who's created one of the most important biotech successes in history. He comes into Immunome. He raises money down at $6. He puts in his own money. Some of the most important institutions in biotech get involved, and the stock is freely tradable, and the stock is up 200% for them. They're not selling. I mean, they could sell every share they want. They're not selling. These are guys who have been on the ride in CGen and made billions of dollars. So he has a loyal following. So you put a man like that into a company that has a $500 million market cap, that already proven to be so far ahead in B cells that the US government gave them 20 million to work on their drug. And you have the makings for what can be a bona fide home run. So I thought, you know what? Everyone's talking about Tesla on Twitter and every name, and I do it too when I have an edge. Hey, I'm shorting this, I'm buying this, but I thought this one's special. This can be up several 100%. In fact, I'm pretty confident it will be one day. I'm going to share it because we have one of the most important men in biotech, like I said, running a teeny little company, and it's starting to get recognized. And this could be a stock that is up huge. And recently it's gone from 7 to 19. So it's up huge. And it's been, let's just say it's been a godsend to me, my friends, family, and it's changed a lot of people's lives, and kind of proud of it. So it's a fun run. I think it's going to 30, 40 long-term. And I think this is a really big company, but for anyone that's in it or followed me in it, you'd be a total idiot not to take some profits along the way. But I don't believe this is anywhere. It doesn't resemble what it does today in the long term. You understand about ADC or understand what's going on in biotech and what's important. This guy is buying assets for 5 million, 10 million that he thinks can be worth literally $1 billion. He's doing it all over again. So I'm in it for the long haul, but yes, I've taken some profits. And if it goes up another 100%, you could be sure as hell that I would be doing the same again.
Yeah. And I'm sure you and I, over, the next few months of doing this, we'll talk about this company often.
I want to talk to T3. Another thing I'd love Clay, who's a wonderful guy and has a lot to say, is maybe do something special where we can have Clay talk to the public. See what it can do. No, not my partner. That's
not your partner.
I just don't want for legality. I don't want to pretend I can do it. We have to see. But wouldn't that be fun to have the CEO talk to the public and do something? So
yeah, we'll have to talk about it. All right. Let's get into the earnings tonight. MAG7 starts tonight with Microsoft and Google. Real quickly for everyone, here's a look at Microsoft's chart since the October low, moved up, obviously. Huge moves here as pretty much all of tech, of course, moved higher since the October low. And then here's a look at Alphabet, Google's chart since the October low as well. You saw that dip at the end of October, but then following alongside Microsoft. How are you approaching tonight's earnings? Are you holding any positions heading in? Are you doing any options? What are you doing?
I will not have Microsoft into the print. I might take some Google calls. Google, I think there's maybe some upside there. Microsoft is going to be a good report. The question is it good enough? My bet is it might be an option seller's win, meaning I don't feel strong enough to short the stock or buy the stock. And I think it'll be a good quarter that sells off on the news. And I see no edge. So I wouldn't be shocked if option buyers on both ends lose. I really think it's strong. I'm not telling you something, or the street who's ever watching, they don't know. There is so much built into the report. And anyone who's buying also is then faced with wondering if Jay Powell is dovish enough tomorrow to make these big cap stocks that continue to make new highs go even higher. So my bet is there's no real upside there. And I don't feel strongly enough that the report will be bad enough to be short. So I see literally nothing to do, but it's been a hell of a run, and I expect solid numbers, just not good enough to make the stock continue north.
Do you foresee yourself, you're not holding anything heading into the
up there
print?
40 times too. So there's a few reasons I won't. Sorry to interrupt.
It's okay. I know you're not holding anything really heading into the print, but either of these stocks, do you see yourself, tomorrow's session,
I see
pre-FOMC, maybe looking at some things that you might, I know you like to plan things out, and then if X happens, you do Y. Any type of those plans happening for you for either of these stocks tomorrow?
Google's still reasonably valued. It's not cheap like it was down when it was under 140, but Google has some meat on the bone. Everyone really hit it hard when we saw cloud miss numbers, and they didn't miss by that much. So I think ad's strong. I think YouTube's strong. I think it's still a really profitable company. So I think there are levers to pull there. I could see being involved with Google. Again, and I want to clarify this because I look at stocks a little bit more simply. I think the overall macro condition is what creates a lot of these moves, right? So we can have the best news, but if everything's falling apart in the world and Jay Powell's super hawkish, then it doesn't matter. A lot of these stocks are in a vortex, are going to go down. So I'm really keen off our Fed chairman. And then the meat on the bone to me, if our Fed chairman is not too hawkish, is really going to be in small to mid-cap stocks. Not to get off this topic, but that's where I'm looking to build and get more along in IWM, which I own, or an XBI. In terms of Google, yes, I might do what we have patented, the day after trade, which is pretty simple. If you look at any of these stocks, they tend to build a range right off the open. And in a circle, many people do this trade that it's kind of funny because I came up with it, but I'm not like some, let's just say I'm not a chart guy. So I don't come up with like Scott, who's got this wonderful red dog reversal. That's not my thing. I run a small fund and I don't come up with terminology and so on. But years ago, I realized, okay, stock builds a range at the open, takes out the high, it trends higher. Real genius stuff. Takes out the low, trends lower. So we call it the day after trade, and it works. If I had to quantify it, 80-85% of the time, maybe even 90, right? You saw it with SMCI today. Took out the low at the open and just continued lower. So that's how I play Google. I'm thinking it'll be higher. In terms of taking a big stake in Google up here, I don't see it. I picked my MAG7 names. They were NVIDIA to start the year, and they were Amazon. And I remain in Amazon. I added some calls yesterday. I took off stock because I was up quite a bit going into the print, so I could know what my risk was. I took the stock off, and I have calls going into it. I have 160s and 165s, so 160s are up a lot. So I'm kind of playing the print for free. That's what I'm playing this week in terms of the names ahead. Google, I can see some upside because it's not all built in as much as it might be in, say, an AMD or a Microsoft.
Okay. Microsoft and Google, of course, are not the only MAG7 names reporting this week. I mean, it's a huge week. We're getting Apple, Meta, and Amazon all after the close on Thursday. Here's a look at Apple's chart since the October low. Not as straight a run up. At the beginning of January, you saw that little bit of a dip, as I think a lot of profit taking was happening, as many people expected, but then back up into that higher range. Meta, I skipped Meta. Here's Meta. Look at Meta's chart. It closed at like just under 400 yesterday, right at that mark. I took these screenshots yesterday, of course. And then Amazon. You have said that Amazon is your favorite MAG7 stock heading into 2024. You were tweeting about it over the weekend, saying Amazon was hitting new highs on the year, saying it's still one of your favorite names into the print. You are long stock and calls. Are you still long stock and calls?
Took off the stock yesterday and added more calls. So I have 160s and 165s.
Okay. So let's talk about those three names, Apple, Meta, Amazon. It's interesting because tonight is Microsoft and Google pre-FOMC, and then Apple, Amazon, Meta is Thursday post-FOMC. Yep. So the environment, I think, is a little bit different heading into
there's less of these prints. People who are buying tonight or selling tonight have to guess what happens tomorrow, or we're going to have some real data and information on Thursday as to not only what these companies report, but what our Fed chairman is thinking. So it is a different trade without a doubt.
All right. So what are your thoughts on those three companies?
Meta's been a cost-cutting story, right? That's become super, super profitable. It was super, super cheap. He learned how to stop talking about the metaverse, and it became one of the biggest winners, up 300%. So if Reels is kicking butt and everything's great, can it go higher? Sure. But I look at Instagram and I think slowing momentum. I look at Facebook and I think there hasn't been momentum in years. I look at WhatsApp and I think the guy's still not really monetizing it. I get Reels is something. Is it enough to take the stock yet further? My bet is no. I could look like a fool tomorrow, but I just don't see the risk reward in it. I understand it's not expensive. I also am a little shaded because, well, I bought it at 88. I also sold it like an idiot a couple hundred points ago. But my point is, it's really come far. So I don't see risk reward in this print. It doesn't mean for those who people love Meta, I understand it doesn't trade at 50 times earnings. I understand that Zuckerberg found Jesus and he doesn't talk about Meta all day. But it's no longer a cheap stock that's an underappreciated asset. You might have Brad from Altimeter talking about that. That it's not appreciated enough. In my view, it's finally appreciated. I don't see the risk reward in the print. I have a friend who's smart who took some puts earlier today. He's already up in them. I'm going to do nothing with the print. I'll play it after.
Okay. What about Apple?
Apple, I trade Apple like by appointment, right? And the reason I do is because I learned years ago that my opinion is worth dog do. Because, Apple, if you understand stocks and you really are a student of history, you understand Apple trades at double its PE now because everyone got excited about the services business, even after they had like 4 or 5 down quarters. And to me, that's kind of dumb. But again, my opinion means absolutely nothing. So the end result is I almost don't care and have no play because Apple really doesn't trade like it's supposed to. Because in my view, Apple has become the most important money market fund in the history of the United States. And it just so happens to give you some upside every time the stock goes up. I think it's a money market fund that happens to be the best company in the world. But valuations, excitement, we're one of the most important analysts today out there in China is, I forget the fellow's name, is talking about, sales, handset sales slowing down great. I don't see the risk reward. I get they produce more cash flow than any company in history. And if someone wants to own it forever, you've done the right thing, but zero interest.
Okay. And then Amazon, we know, is your favorite.
Yeah.
So talk about how you're approaching that print as well.
I think you have the fellow who created the profit engine to Amazon. Without AWS, well, you don't have the Amazon we have today. The stock would probably be half. So Andy Jassy, to me, is a ball to have as a CEO. He also found Jesus and sold warehouses and sold planes and cut workforce where he can, because obviously it's a workforce intensive business, right? They need people. But overall, they really cut costs big time. They're producing more cash flow than they ever have. And obviously the economy is holding up. People are still spending. And then there are things like the advertising business, which do billions, not like 200 million. They do billions in revenue, which could be a standalone business. So how many of the MAG7, or as Kramer calls it, the Super 6, whatever the hell, how many of those are still 20% off highs as business is getting better with the most dominant cloud name there is in AWS? There are no. Just Amazon. Now, last I bought the stock was 139, 140. It's 160. I bought 160. Calls are up. So I can say that and be comfortable into the print because if they miss huge, I know my risk. I'll give back some of my gains, but I have nothing to lose, right? In terms of real money. But that's the setup I like best. Still far off highs. I think highs split adjusted are like 188 and change. We have a dominant CEO. We saw a little uptick in AWS. So I like the hints we're seeing. And that's the one I like best. People who are, let's say, valuation conscious will say it's expensive. It's been expensive since I was born. I mean, it's not around that long, but you get the idea. If you never bought Amazon because it's expensive, you missed thousands of %. So I like to play. I want to make it clear. I don't like earnings season in general. This quarter, I kill it.
Yeah.
Earnings season, we really do some big earnings. I remember I had a Google call a couple of quarters ago. I don't want to say.
Yeah, I remember.
But my point is, this earnings season, where the market's gone straight up, and everyone is so focused on macro, I just don't see a lot of upside. Maybe I'll get proven wrong, but I don't mean to be a bear across. It is what it is. These stocks have gone, some of these stocks are up 70. I mean, Meta's up 300%. So I find it hard to be that bullish any of these. That said, after SMCI pre-reported, I had fun buying it up 30 or 40. I thought it was still too cheap. So there, maybe someone will give us that type of outsized report and we can still own it. And I want to say one last thing. Everyone wants to predict right. Sometimes there's nothing wrong with waiting for the information, absorbing it, and seeing if there's still an edge. May I suggest, I actually, with you last week, suggested if Netflix is to do anything, my thought was upside, and it did go higher, and you could have bought the stock at 5:30 after the news, and you could have made 50 points this week, which I'm not a mathematician. It's still 8-9% on a stock, 8-9% on a big cap stock in a week. That's really good. Mm-hmm. You could have done it all after the print. So you don't have to bet earnings per se.
Mm-hmm. Yeah. And as we've talked about multiple times here, that's something that you in the inner circle, the day after trade, you guys focus on a lot. And it obviously, is successful for you guys a lot. I want to answer a question real quick from YouTube. Somebody asked, what is MAG7? So just real quick, I'll answer this. The definition of MAG7 is the Magnificent Seven stocks. It's those big cap tech stocks: Microsoft, Google, Amazon, Apple.
I think Tesla kicked them out.
Tesla maybe, and then NVIDIA. So it's those front.
So you answered. I was going to say it's a dance I created in '72. So it's a good
so instead of the FANG that we used to have, of course, FANG is no longer because Facebook is now Meta, and names have changed and new things have come in. That NVIDIA is the N now instead of Netflix, etc. And then a funny comment I think we got, it's just a little silly. Katrina, we are streaming this on Facebook as well, David. And she said, it's so funny that you're making yourself known on Facebook, but you're not taking Meta for earnings. So just a little fun comment.
Oh, are we streaming on Meta? Okay.
Yeah, we're streaming on Facebook.
Right over my head.
And then you and I talked about Tesla earlier, but somebody
Can
asked
I say something to that? Because it's a huge lesson.
Oh, what sure.
What you do in life and whether a company is good has zero to do with whether you buy or sell a stock. So it's actually, in reality, in money management, it's not funny because what I deem of a company has nothing to do with whether it's a good stock or not. Sorry, continue.
Yeah. And then you and I talked a little bit about Tesla earlier, what you've been doing with the stock recently, but we did get a comment on Twitter asking for your thoughts on Tesla. Tesla is down 70 points, asking, is there a bounce to 260? So do you want to just talk about that real quick? Or 206, yeah, not 260.
Markets go straight up, people will be desperate to find something that's down, and then it would go. Otherwise, do you remember when Meta broke and really the fervor was gone and Mark Zuckerberg was no longer considered smart? He was considered a bonehead that was burning billions of dollars every quarter. Rhetorical, everyone remembers. And even though it was only 20 times, it went down again. And even though it was only 15 times earnings, it went down even more. And eventually it was trading at a single-digit PE. So let me ask you guys a question. I'm just throwing this out there, what I see. Tesla is faced with real issues. It's no longer like the average issues. We all know about Elon. I mean, the guy's a genius, but we also know that he's dangerous in the things he says and Twitter and the purchase he made of Twitter. Let's move on to macro. So it turns out that companies like Avis are giving away, they're not giving away, but have to get rid of 20,000 EVs, i.e. Teslas. We know that everyone's built up tons and tons of inventory because everyone's going to have an EV. Turns out the demand's not there yet. And was Tesla where it was because it was the hottest auto company in the world? No, part of it we all know is because there was this fervor. There was a cult. Elon was the best. He's the Einstein of our generation. I should say Thomas Edison. I think that's broken. Now, does that mean, by the way, I bought Tesla the last time this happened at 107 and did well with it. But so do I think there's never a time to buy? No, but I think the bloom is off, and I don't think it's hit lows. I really wouldn't be shocked. From what I'm seeing on the charts, 144 to 150 before there's any real bottom. Could it keep bouncing like it just did, 10, 15 points? Sure, but I won't like partake in it much. I really think it has huge dynamic problems between margins going down, having to lower prices to create demand, to the macro condition, to interest rates maybe not going down fast enough to make their cars affordable, to the CEO himself, who is really considered an absolute genius. And I get why. I mean, I'm a dummy. But he's not an easy CEO to bet, and institutions want to go to sleep at night. I think it's a tough fight, and I don't think lows are in over the next 4 weeks.
Tesla has obviously been like a longtime favorite of traders, but also longer term investors. We're what, 3 stock splits in at this point?
Two, definitely, maybe 3. I know.
I think definitely 2. Yeah, maybe 3. Do you think the way Tesla trades and the type of stock it is changing?
Yeah. So what happens, right? And it's the dirtiest time in a stocks trade. And I say dirty because it's important. When a stock goes from being a growth company to a more mature, say, value company, let's say what Meta went through, you have a whole change in investors, and you get churns and breaks and what people think is a bottom, and then churns or breaks. A lot of growth investors, and I'm not saying everyone, but you have people like Kathy who lowered her position a great deal. I get it. Now it's down and she's buying some back, but you have a lot of the predominant, bulls actually lessening their positions on some of those rips. So you have some of the better known, bigger growth investors getting out, no longer thinking it's this amazing short-term growth story. While maybe there'll be some, I don't want to say value yet, some value players coming in. That part of a stock's chart is so messy and hard to figure out. It is not, bottom line. Any growth investor who looks at the stock right now over the next 3 months after listening to that conference call with Elon Musk is not buying it for a growth story near term. They're buying it for a dream and a growth story over the next 2 years. So the next 3 months, he had nothing good to say. Oh, sorry. He said one thing. If rates go down a lot, then we'll do a lot better. That's not what a growth investor wants to hear.
All right. Let's talk about the big story of the week so that you can get back to work. FOMC is obviously the headline event. Tomorrow is the headline day. This is our first Fed meeting of 2024. They, of course, started meeting today, but 2 p.m. Eastern time tomorrow is the time. We get the decision, and then 2:30, Fed Chair Jerome Powell will be speaking. These were your thoughts over the weekend. You said, I see traders spin their wheels chasing candles on Fed Day. Don't force a trade because of the moment. If it's a setup worthy of your attention or not. Sometimes the best trade is doing nothing. And you said you approach these days with a plan. FOMC, CPI, PPI days have often been good to you, but you said you have a plan based on the information presented. If you see X, then you go with plan Y. In essence, the work is done before so that you can execute and not overthink. So how are you approaching tomorrow's session ahead of 2 p.m.? And then what's your plan for 2 p.m. to 4 p.m.?
Exactly that way. Okay, thanks. Bye. No, in essence, what I really do, especially in an event like this where we know there will be no change in policy tomorrow, and it's about guidance towards will there be a March cut, and can there actually be 4 or 5 cuts this year, or are the markets ahead of themselves and it's more like 3? So the way we figure that out is through his words, which come at 2:30. And I don't want to blow my own horn, so I'll just simply say I think that's the part I'm better at than some other things. And in the past with Inner Circle, I will read between the lines of what he's saying, and we will have planned ahead of time what will move most based on what he's saying. Thus, someone who's too hawkish, who is trying to hint that maybe we're too positive about a cut in March, might tell me, oh, you can short Qs. Or someone who gives a hint that although this whole 5 cuts, we have no plan for that, and we're not that worried about the economy, right? But giving us a hint that there will be maybe 4 cuts, and there could be one in March that opens the door to upside where, to me, XBI and IWM, small caps that are really, really need him to kind of say, hey, we are going to cut. He's not going to say it like that, but give some strong hints. Without that, we're going to have small caps come back in again. They already had a false breakout yesterday. So the plan will be basically where's the most upside based on what he says, and maybe it's on the short side. And then if he says something, gives us a hint, and then sometimes I'll say, guys, he is split right down the middle. I have no edge, and I'm waiting. And he talks out of both sides of his mouth, not in a bad way, but because he doesn't want to say too much sometimes. So it really is about listening to what he has to say. Right now, the market, what are we at? 47, 50%. I don't remember where we're last at on a cut in March, but I will say the JOLTS report shows the jobs market still hanging in, right? And our Fed chairman has been very clear. He needs to see the jobs market weaken. Yes, he wants people out of jobs. Bottom line, that's the way he thinks the economy gets rid of inflation. So I'm of the thought, but I don't know, that tomorrow he is not hawkish, but he's not dovish enough, and there's more downside than upside. That's my gut. But if he gives an opening, and he did it last meeting, it was either last meeting or the meeting before, he gave us an opening, and I said, people, I am more bullish IWM than I have ever been in my life. It was somewhere in the 180s, and it went up like 20 points in a few days. So if he gives that opening, I'll react to it. That's the cool thing about where we are in the markets. We have these big ranges, and you can actually miss something and not be at the absolute bottom and make oodles of money a la Netflix earlier in the week. So I'm really going to be listening to 230 to figure out my plan. I still think if he is hawkish, the meat on the bone is in small to mid cap. Am I buying Upstart? No, but will it go up 5-6 points? You bet. You can bet it will, right? You can bet that IWM is back over 200. If he is hawkish, well, then there's some downside across the board. And what has just gone straight up? Well, the Qs. So I wouldn't be shocked to see down 7 or 8, and I'd probably be getting short the Qs. And that's kind of my basic plan heading into it. But I'll listen. And if I see nothing to do, I'll just sit there and be bored.
You mentioned the JOLTS data today, the job openings coming in hotter than expected. That did drive down the chances of a March cut to 40% on the cut, 60% leaning toward they're going to stay unchanged. And now we're looking at probably the market's betting on a May cut. This isn't the only jobs data we get this week. Tomorrow we get that ADP private employment report. Thursday we'll get the weekly jobless claims. Friday we'll get the big jobs report from the Labor Department. So it's like you get a Fed meeting on Wednesday and then a jobs report on Friday.
It's a Super Bowl.
It's a huge week, of course, for the market, for traders, for investors, for really everyone obviously involved in this. What are you feeling ahead of the jobs report on Friday? Where are you kind of leaning for that after the Fed meeting tomorrow?
Ready? No clue. And let me tell you why.
Yeah.
I don't think anyone can answer that, because we can be down significantly or higher significantly based on FOMC, Microsoft, Meta, and all these reports pre that. I think because of the run we've had, so much of it is going to be how much is built in. So if our chairman, let's say, is a bit more hawkish and then NFP tanks and is a big miss, well, people are going to be like, okay, we knew that cuts are coming. Now we can ignore him yet again because the NFP is the data he needs, and we can run back up. So a lot of it is going to be how far have we moved? Where are we? The Qs are sitting up at 428. I don't think it'll mean much. But if we've come in and the Qs are getting closer to the 21-day, they're still like 10 points away, then I can see a soft NFP, even on a hawkish Fed chairman, bounce right back. So sorry, I don't mean to talk around the answer, but so much of it is, where are we between today and Friday morning, like after all the earnings reports? We have 5 huge reports pre then. Actually, 10 or 15, but 5 brand name, MAG7 type names.
All right. So for everyone who's still with us, this link has been up throughout our show here. But if you want to get David's free ebook, you can go to t3live.com/DP on YouTube. That link is clickable. in the description box. I'll go ahead and put it in the chat as well, just so people can click it if they would like to get that. So again, that is David's free ebook. Oh, my post is clickable, so let me just type that again. David,
yes,
we will obviously be talking about your reaction to the Fed and to the jobs report next Tuesday. So just a preview for everyone. Come back, join us next Tuesday, and we'll get his thoughts post FOMC, post jobs report, and ahead of more earnings to come. So again, thank you, David, for joining me for this today. David is a real trader. He trades full time, so we got to let him get back to the market. We'll see you guys in a week.
Have a great week, everyone. Thank you.